Hi everyone, my name is Sergey Zotov and I'm in hedging process. Today I want to tell a little bit about trading day, and it's going to be a short video, really short, prepare for it. So topics here to cover: checklist, trade itself, and live trade feelings. Okay, let's start with the checklist. Before you trade, it's just to make it easier for you. You should have your checklist done. Normally, what I see for myself, I want to see rate that we agreed to achieve. It's not as simple as it sounds. You should align internally at what rate you are willing to hedge and at what levels. Obviously, it sounds easier when you have one contract expiring in 1 year and the rate is, and you basically have one rate, 1.2, for example. So you just go to the market, look if you are able to achieve that trade and lock in, and that's it. You're fine, you're done. But imagine you have 70 contracts, 70, for several subsidiaries to cover their foreign exposure. And not only that, you decided with your team that you are hedging at certain level, 50% of your exposure, another 25% at more opportunistic level. Opportunistic means more favorable for you, and another 25% at even more opportunistic level. So what does it mean? It means that you have 70 months of exposure, and by 70 I mean, for example, 70 subsidiaries and 10 months for each, all in different currencies. But also you have different levels. You have 3 levels for each subsidiaries. So basically you are looking at 210 foreign exchange levels to hedge, and it might be an exercise. So make sure you know your rate, you agreed in advance, and you have clear table on that you're going to execute. And don't try to look clever. Be safe. Explicitly write to your broker, I want to buy euro, Aussie dollar, Great Britain pound in 1 year because my expenses in these currencies. Don't try to use acronyms they use like Euro USD, GBP to USD. You might mess with it, especially at the beginning. And I'm sharing it because it was my mistake at one point of my career. So go as simple and as explicit as possible. Don't be afraid to be silly when you then you decide to trade. Articulate it to your broker clearly. Volume, the next checkpoint. It's also important. I mean, you should know your volume, and it's not that trivial because you have to, again, align with your strategic finance team, your analytics. I don't know what is your company structure, but wherever your structure is, you have to align with some guys who forecast expenses. And after that, you have to align with your CFO. And even more, if your company is small, maybe you will also have to align with the board of directors because the board has different view on volumes because they know better the direction of the company. Or to say, it's a big preparation. Again, imagine it's 70 contracts. So you have to have understanding over your volumes for 70 periods. Keep it in mind. Be careful and allow yourself time to work on it. It's a bunch of preparation. Approvals. Approvals is very critical. It's very critical from 2 perspectives. It really highlights control environment that you have in your company, and control environment is normally what every company wants to have to first to go public, and second, not to be destroyed by actions of some people, intentional or unintentional. Anyways, it's crucial to have good control environment in place. So and I will dedicate several videos to that. It sounds easy, but it's hard in execution. To execute approval process properly, again, it needs time, needs alignment, but for these purposes, it's just checklist. Okay, get your approvals before you trade. That's it. It's not a question, it's just a mandatory. Get approvals before you trade. And for accounting purposes, the last point I have is designation document. According to both IFRS and US GAAP, you have to prepare your designation document around the date of trade. If you are public, you have to do it before or on the date of trade. Designation, again, it's going to be separate discussion, really long, what to have as a designation document. It's basically reconciliation between your exposure and your hedge with all critical elements written in that document per contract, per period, with accounting method used, with effectiveness test being used, and that is going to be used for the future period. So make sure documentation in place, you know the rate, you know the volume. Next, trade itself. Trade. You should go to several brokers. It's not a question. These guys making money out of forward points and spot rate, if you speak about foreign exchange contracts. What does it mean? It means that, okay, for the forward contracts, there are two components. First component is spot rate, and second component is forward points. Because to have opportunity to fix some amount of currency in future, you have to pay something or to receive something, depending on the interest rate differential for that currency. But, okay, not but, sorry. First component, spot rate. Spot rate is not what you see at Google Finance or Yahoo Finance or whatever. Spot rate is something that bank can really provide you depending on their balance between demand and supply. Listen to it. It's not something universal. It's about your broker, supply and demand. So they have a list of suppliers of currency and demanders of currency. And depending on this balance, they can propose certain rate. And it's not Google rate. It's always different. It's never the same. Be careful here, because some brokers tend to put their commission into bid-ask spread in a spot rate. And their spot rate is not as favorable as others' spot rate. Okay, forward points. They're also different. Is what really comparable? You're asking quotes for a couple of brokers, and what they show you spot and forward points. Forward points they can fix for a couple of hours, sometimes for the day. But for the spot, they always tell you, hey, it's changing every minute, we cannot guarantee it. So you cannot compare spot rate. So what you have to do, you have to go into multiple iterations with several brokers, checking the water, trying to understand what's the difference in spot, what's the difference in forward. And you have to do it before the trade date, because on the trade date, everything's gonna be in rush. Once everything's approved, you have to execute. And if the rate is in your range, you have to do it quickly, because the rate might go away from the range and you will end up without hedging. And rate can might never go back to your range, and you will be uncovered, and you will have to explain why you uncovered. So again, preparation. You can put it on a checklist. So it's broker's preparation. You have to contact every single broker, ask what they provide at a certain moment, what's the rate they provide, what are the forward points. Also, you can check how quickly do they react to your message, what is the time lapse, and you should make your notes on that, because on the day you trade, you have to have your preferences. But at the same time, you still have to ask all the brokers you have for the rate and choose between them. Okay, that is it. Live trade feelings. That's my last talking point on that. Live trade feelings is when you're looking at your screen. Some brokers allow it, and you see the rate is moving and forward points are moving in any direction, favorable and favorable, and you're trying to catch it. What I do feel that I do that exercise, and I hate it, like I hate it. I feel that the rate goes in my direction. I always feel like I will wait a little bit longer, maybe it goes further in my direction. And if it goes opposite, I'm feeling anxious because I haven't had locked in than it was in my range. And really, it's really hard. You will face it definitely at some point if you trade live. The solution I found for myself is just stick to your checklist. You don't have to be inventive. You have your rate. It's approved. Investors are okay with that trade. They budgeted for it. If you lock that particular rate, it's already great. So target for that trade. If you see it, just lock in if you're on live trade. Otherwise, you will just spend hours and hours and hours trying to be more beneficial, but it's impossible to outplay foreign exchange market, especially in the short run, especially intraday. It's just impossible. Okay, that was it for today. Thanks for watching me. Yeah, take care. See you soon.